Hi there, accountancy students. So welcome dito sa ating discussion for Philippine Accounting Standards 1 or PAS 1. Okay, a quick review for this standard is that Philippine Accounting Standards 1 or PAS 1 is a Philippine adaptation of the International Accounting Standards 1 or IAS 1. Okay, so for this discussion, we're going to focus 4 matters. Okay, so we have to discuss the basic concepts of PAS 1, the elements of financial statements, profit or loss statements, and statement of financial position. Okay? So starting with the basic concepts of PAS 1, the descriptive title is Presentation of Financial Statements. So by the name itself, alam nyo na agad kung ano ang nilalaman ng PAS 1. Okay? PAS 1, pag nakitang title na yan, dapat nasa isip. Okay? It provides provisions on the presentation of financial statements on how we're going to prepare and present financial statements. So the objective, according to paragraph 1, it describes the basis of presentation for general purpose financial statements to ensure comparability of the financial statements within the entity and those financial statements of other entities. It set out requirements for the presentation of financial statements, guidelines for their structure, and minimum requirements. So meaning, pag ang isang entity gumawa ng isang financial statement, pag nag-prepare ng financial statement, at a minimum kailangan pong sundin ang mga provisions ng PAS 1. Okay? Scope, according to paragraph 2, an entity shall apply PAS 1 in preparing and presenting general purpose financial statements in accordance with Philippine Financial Reporting Standards or PFRS. Okay? So therefore, pag gumagawa po ng mga financial statements, kailangan in accordance of those applicable financial reporting standards. Okay? PAS 1 and PFRS, or sa madaling sabi, kailangan accordance with GAAP. Okay? Financial statements. Okay. Na-mention na that PAS 1 is for presentation of financial statements. So how can we prepare financial statements if we do not know what are financial statements? So to define, financial statements are structured representation of the financial position and financial performance of an entity. These are financial reports that are being prepared by an entity every accounting period to provide information on the results of the operations. So meaning kung ano ang mga nangyari sa buong taon dyan sa assets, liabilities, equity, income, and expenses ng isang kumpanya. Okay? Or sa madaling sabi, the whole operation ng isang company. Okay? Dinidescribe dun sa financial statements. Of course, describe in terms of accounts and the related balances. Okay? Objective and purpose. The objective of financial statement is to provide information about financial position, financial performance, and cash flow of an entity. Okay? Meaning, it set out information. Okay? It provides information about the asset, liabilities, equity, income, and expenses, including gains and losses, contribution from and distribution to owners in their capacity as owners, and cash flows of an entity. Okay? So, lahat po ng elements of financial statement, ginagawan po ng information. Lahat po ng information doon, transactions, changes, nilalagay po dyan sa financial statement. Okay? Yan po ang objective ng financial statement, to provide information about the assets, liabilities, equity, income, and expenses, including gains and losses, and also contributions from and distribution to owners, and the cash flows. Okay? Including also the necessary notes. Okay? There are necessary notes that are to be disclosed in the so-called notes to financial statements. Okay. The complete set of financial statements are as follows, from statement of financial position down to third statement of financial position as provided in PAS 1. Okay? So statement of financial position, also known as balance sheet, it provides information of an entity's assets, liabilities, and equity or capital as of the end of accounting period. Take note, the purpose of financial position is to provide information of the entity's assets, liabilities, and equity. Okay? And the clue phrase there is as of the end of accounting period, meaning all the accounts and the balances presented in statement of financial position are cumulative. Okay? Because as of the end of accounting period, meaning from period to another. Okay? Statement of comprehensive income. Statement of comprehensive income provides information about an entity's financial performance for a current reporting period. Okay? Showing the profit or loss and the other comprehensive income for that concerned accounting period. Okay? For that current accounting period. So it encompasses both the profit or loss statement and other comprehensive income statement. So don't be confused. When we say comprehensive income, okay, we mean the profit or loss and the other comprehensive income already. So statement of comprehensive income, two statements. Profit or loss statement and other comprehensive income statement. Okay? Statement of changes in equity. Statement of changes in equity provides information about the changes in the entity's capital structure or equity structure during a current accounting period. So all changes in the equity accounts, including the reporting of profit or loss and other comprehensive income, are stated in changes in equity. Okay? Statement of cash flows. It provides the information about the cash inflows and outflows of an entity which resulted to the net change in the balance of cash for a current accounting period. So therefore, all the cash receipts and disbursements are being reported there. Okay? Quick overview for statement of cash flows. The components of cash flows are classified into three major activities. We have the operating, investing, and financing. Okay? Notes to financial statements. Basically, this provides a significant disclosures and notations, okay, comprising the summary of accounting policies and other explanations related to the accounts and balances presented in the financial statements. Okay, so it includes narrative and descriptive information of all, okay, what been presented in those specific financial statements. Comparative information, okay, or comparative FS. It is a financial statement presentation, okay, comparison of current period and previous periods financial statements. Okay, so third statement of financial position. Okay, the rule is as at the beginning of the preceding period, okay, as an addition to a minimum comparative information with respect to retrospective application of accounting policy and other restatement of items in the financial statements. Okay. In order for us to prepare, okay, financial statements, PAS 1 provides the following principle. Okay. First, fair presentation and compliance with PFRS or IFRS. Financial statements shall be prepared in a way that it presents fairly the statement of financial position, financial performance, and cash flows of an entity. Preparation requires faithful representation of all transactions, meaning, okay, no more, no less of those transactions. All changes that have happened in the assets, liabilities, equity, income, and expenses, okay, should be disclosed and presented in the financial statements. Okay, and it should be in adherence, okay, in adherence as much as possible to an applicable accounting and reporting standard. Going concern, financial statements shall be prepared and presented in the viewpoint of continuing operations in the future, okay, unless the entity intends to stop and liquidate the business. Meaning, the financial statement should be prepared, okay, in the viewpoint that we're going to continue the operations in the next succeeding years or succeeding accounting periods. Okay? Accrual basis of accounting, general rule, okay, of accounting, financial statements should be presented in an accrual basis, meaning financial statements shall be prepared in a way that it follows the standard basis of reporting, okay, prescribed by the conceptual framework. Okay? What does it mean? When it satisfies the definition of and recognition of assets, liabilities, income, and expenses. Okay, so therefore, we are referring here with accrual basis, recognizing for accounts receivable, accounts payable, accrued income, and accrued expenses, and other deferrals. Okay, materiality and aggregation. Financial statements shall be prepared in a way that it presents separately material items for both similar and dissimilar nature unless considered immaterial. Okay? Meaning the assets that have material in amount, okay, or other line items that are material in amount should be presented separately. Okay? Offsetting, all items of assets and liabilities for income and expenses shall not be offset unless required or at least permitted by an applicable BFRS or IFRS. Example of that is the presentation of your deferred taxes. Okay? Deferred tax benefit should be presented separately as an asset. Okay? And deferred tax liability should be separately presented as part of the liabilities. Okay? They should not be offsetted. Okay? Frequency of reporting. The complete set of financial statements, including comparative information, should at least be prepared annually. Okay? Unless there is a change in the coverage of financial reporting, okay, that should be disclosed. Okay? The reason for that should be disclosed, the reason for the change, and also comparability of amounts shall also be disclosed if there are changes, okay, and the comparability of those amounts presented. Comparative information, okay, at least at a minimum 2 statement of financial positions, comprehensive income, and 2 separate profit or loss if necessary, 2 cash flows, 2 changes in equity, and related notes. Okay? All amounts from preceding financial statements shall be restated to reflect the current situation. So comparative information, the concept is that, okay, you are presenting both financial statements of the current and from prior years. Okay? At least the immediate prior year. Okay? Consistency of presentation. Financial statements shall be prepared in a consistent manner from period to period. Meaning, all the accounting policies should be applied consistently in preparing financial statements. No matter what the changes happened in the uh, application of accounting policies, it should be um, applied consistently. For example, we have 2 policies, policy A and policy B. Policy A is applicable for the first 5 years, then after 5 years, there is a change in accounting policy. Okay? And policy A is no longer applicable and policy B will take over. Therefore, policy B will be and should be consistently applied throughout the succeeding accounting periods. So therefore, even though there is a change in the accounting policy, consistency shall be applied. So therefore, application of accounting policy A is consistent for the first 5 period. Okay, and the next accounting periods, the consistency of application of um, policy B. Okay, identification of financial statements. Financial statements shall be prepared in a way, okay, that it should be clearly identified from other documents or information in the same published document. So therefore, it must be with a heading. Okay, it should be identified. It should be named that this is a financial statement. Okay, if it's separately been prepared, it should be identified. Or if that financial statement is part of an example, an annual report, which is a one document preparation, it should be identified that this portion pertains to financial statements. Okay, so kailangan dapat merong identification, may consistency. Okay. At ang ating frequency ng pag-report kailangan at least annual sa isang buong taon. Okay? So other presentation requirements or disclosures of PAS 1. Okay, for statement of financial position, sabi dyan, an entity preparing its statement of financial position as a minimum should provide adequate disclosures on the further subclassification of line items. Okay? As a minimum, property, plant, and equipment, okay, shall be subclassified in accordance with PAS 16, okay, if necessary, such as land, building, machinery, and equipment. Usually, this subclassification is being disclosed in the notes to financial statements. If the one line item, property, plant, and equipment, is already been presented in the statement of financial position, the subclassification should be presented and disclosed in the notes to financial statements. Or, if the manner of presentation so requires that land, building, machinery, and equipment should be presented in the statement of financial position, such should be disclosed also in the notes to financial statements. The reason for presenting that kind of presentation of subclassification. Okay? Also, we have trade and other receivables, into receivables and trade customers, those from related parties or affiliates, then accrued receivables, and etc. Okay? Inventories in accordance with PAS 2, such as merchandise, raw materials, work in process, or finished goods, etc. Meaning, it should adhere, okay, with PAS 2 depending on the uh, concern of the entity. Okay, what type of business concern is that? Is it merchandising, manufacturing, or a service concern? Okay, provisions related to employee benefits and other items, cash and cash equivalents into cash on hand, cash in banks, cash funds, and other items of qualified cash equivalents. Trade and other payables into payables from, uh, payables to trade suppliers, those payables to related parties or affiliates, accruals, and deferrals. Equity accounts, capital and reserves into paid in capital, okay, and the additional paid in capital or the share premium, retained earnings, and other items of reserves and appropriations. Okay? For statement of comprehensive income, okay, according to paragraphs 85 to 98, when preparing statement of comprehensive income, an entity shall present additional line items, headings, and subtotals when presentation is relevant to understanding of an entity's financial performance. Meaning, if there is a need to have an additional line item in order for the statement of comprehensive income to be more understandable for the readers, then presentation of those line items shall be done, okay, or necessary. Okay, not present any items of income and expenses as extraordinary items. It is specifically stated there in the PAS 1. Recognize all items of income and expense in a period, okay, in profit or loss unless required or otherwise permitted by an applicable IFRS. So therefore, as long as applicable, all the income and expenses or all the revenues and expenses should be presented in the profit or loss statement. Otherwise, if it's not applicable or required by a PFRS, then do not present those items. Or at a minimum, or at least if they are not applicable to be presented in statement of profit or loss, then present it in other comprehensive income. Okay? Then disclose the amount of income tax relating to other comprehensive income items, including reclassification adjustment. So therefore, other than the profit or loss items, okay, other comprehensive income items should be, okay, disclosed that there are tax effect to them. Okay, disclose separately the nature and amounts of material items of income and expense. Okay, if an item of income is different from another item of income, then separate presentation. So with expenses. Okay, other disclosures for items of income and expenses are as follows. Okay, write-downs of inventories to net realizable value, okay, or PPS to recoverable amounts, including any reversal of those write-downs or impairment. Okay, restructuring of activities and any related reversals of cost of restructuring if there are any. Okay, Actually, these restructuring activities are so rare in practice. Okay, should there be restructuring of activities, okay, uh, reversals and other restructuring items should be disclosed. Okay? Disposal of property, plant, and equipment, and also for investments. Okay, any realizable, any realized gains or losses related to that disposal. Okay, also portion of the discontinued operation should be presented in profit or loss, and litigation settlements and other reversals of provisions should be disclosed. For statement of changes in equity, according to paragraph 79, in preparing report in relation to changes in equity, the entity shall disclose the following. Okay? For each class of share capital, meaning applicable to either, okay, to either preference or ordinary shares, the entity shall disclose the number of shares authorized. Okay? Meaning, kung magkano yung inauthorized na pwedeng i-issue na shares ng isang company. The number of shares issued, whether fully paid or not fully paid. Meaning, if there are any subscription, full payment, okay, partial payment, regardless of status should be disclosed. Par value per share, or that the shares have not have no par value, then state the stated par value. Disclose the stated par value. Okay, reconciliation of number of outstanding shares for the current period. Okay, if there are any changes or there are any reacquisition of shares, then that should be disclosed. The rights, preferences, and restrictions attaching to that class, including restrictions on the distribution of dividends and the repayment of capital. Meaning, all the rights that are applicable for that class of share should be disclosed, including preferences and restrictions, if any. Okay? And also, related to that share, if they are entitled to distribution of dividends or liquidations. Okay? Meaning the repayment of capital. Shares in the entity held by the entity or by affiliate entities, meaning the ownership interest of an entity from another entity. Shares reserved for issue under options and contracts for the sale of shares, including terms and amounts, and a description of the nature and purpose of each reserve within the entity. For example, why did a company come up with reserve for depreciation, reserve for surplus, okay, reserve for plant expansions or other reserves. Okay, according also to paragraph 80, the entities, okay, without share capital such as partnership or trust shall disclose the information that are equivalent what is stated in paragraph 79. Okay, at least equivalent, showing changes during the period in each category of equity interest, rights, preferences, and restrictions attaching to category of equity interest. Okay, so meaning, okay, if an entity like partnership and trust do not have share capital, at the very least what is stated in paragraph 79 should be disclosed in equivalent manner. Okay, not necessarily that they will disclose number of shares, no, just an equivalent information. For example, if the ownership in a share capital entity, okay, are presented as in a manner of share capital, then in the partnership it should relate on the changes in the partner's capital accounts. Okay, or any other liquidation of capital, okay, or withdrawal, in its equivalent in the partnership is the drawings or the withdrawal of the partners. Okay, so for statement of cash flows, all requirements, okay, set out by PAS 7 for the presentation and disclosure of cash flow information, particularly to the components of cash and cash equivalents, and the reconciliation of the amounts presented in the statement of cash flows with the equivalent items reported in the statement of financial position. So therefore, all the items, okay, that composes the cash and cash equivalents and the related reconciliation, okay, should be presented and disclosed, okay, related to statement of cash flows, okay, and also related to those items equivalent in the statement of financial position. So therefore, there should be a reflection of the items. What is in the statement of financial position should be reconciled and disclosed in the statement of cash flows. Okay? Um, the policies adopted in determining composition of cash and cash equivalents, including any effect of any changes in those accounting policies, and the significant cash and cash equivalent balances held by the entity that are not allowed for use by the group, including any commentary, uh, any commentary of the management to those balances. Okay? For other accounting policy disclosures, okay, all significant accounting policies or summary thereof that provides information regarding the measurement basis used in preparing the financial statements, usually referring to measurement basis of each line items, okay, for cash and cash equivalents, trade and other receivables, property, plant and equipment, and other assets, liabilities. Okay? Then the other accounting policies used that are relevant to the understanding of the financial statements. Meaning those accounting policies that would provide a smoother understanding for the users. Okay? So those are the basic concept embodied in the Philippine Accounting Standards 1.